Hey traders, today we're breaking down candlestick charts in Forex. These simple red and green bars tell you everything about price movement. Let's see how they work. Each candle also shows 4 key prices. For a bullish candle, the open is at the bottom of the body and the close at the top. For a bearish candle, the open is at the top and the close at the bottom. The wicks mark the highest and lowest prices during that time. In Forex, green candles are bullish. They show the price moved up, closing higher than it opened. Red candles are bearish, showing the price moved down, closing lower than it opened. The body shows the main move, while the wicks mark the highs and lows. Spotting trends. By connecting candles, you can spot trends. An uptrend forms with higher highs and higher lows. A downtrend shows lower highs and lower lows. While sideways markets move in a range. Similar heights, similar lows. Trends show the bigger picture of where the market is moving. In an uptrend, buyers push prices higher step by step. In a downtrend, sellers take control and push prices lower. Sometimes, the market doesn't move strongly in either direction. That's a sideways or range-bound market. Momentum shifts. Momentum shifts are key. When candles grow bigger, momentum is gaining. But when they shrink and colors change, it signals a possible reversal. Bigger candles show that the market is confident and pushing strongly in one direction. When the candles start to shrink, it means that strength is fading. If the colors flip from green to red or red to green, it's often a warning sign that the trend could be reversing soon. Candle size equals market strength. The size of a candle reveals market strength. Big bodies mean strong momentum, small candles show weakness, and a doji signals indecision in the market. When buyers or sellers dominate, candles form with large bodies, showing strong movement in one direction. Smaller candles mean less activity or balance between buyers and sellers. A doji forms when the market can't decide, as the open and close are nearly the same. Reading a live chart. This is a 4-hour candle. In just one candle, we can see where the market opened, the highest price, the lowest price, and where it closed during that 4-hour period. Now, if we zoom out, that single 4-hour candle is actually made up of many smaller 5-minute candles. This shows the detailed price movement within the bigger candle. You can see the open, close, high, and low for each candle, helping you read price action in real time. On live charts, every candle tells a story of market movement. By practicing how to read them, you'll quickly identify trends, reversals, and possible entry or exit points. The more you practice, the easier it becomes to spot trading opportunities.